If you're self-employed in Alberta, your mortgage timeline does not start once you call the realtor. It actually starts months earlier. And if you skip any stage, you can get pre-approved and still get declined when you write an actual offer. If you're incorporated, a sole proprietor, a contractor, or even commission-based, I'm about to save you a lot of time and stress and even a potential decline. Because for self-employed buyers, your mortgage timeline starts months before you ever go house hunting. And in this video, I'm going to walk you through the complete start to finish timeline of getting a mortgage in Alberta if you're self-employed. Make sure you watch this video all the way till the end, because I'm even going to show you the exact stage where most self-employed buyers ruin their approval chances even when they have great income. By the way, my name is Ushindi Mutabazi. I'm a mortgage associate here in Alberta, and I specialize in helping self-employed Albertans like yourself qualify for a mortgage without waiting 2 years for income averages, paying more in taxes, or changing the way you run your business. Stage 1 begins 12 to 18 months before you buy, and that's building the file you need. This early on, the goal is not to get you pre-approved. The goal is to build a lender-friendly story, because sadly, lenders won't approve you based on how hard you work. They approve what you can prove. Your proof as a self-employed person comes down to 3 stories that need to be told. The first story is your income, not your revenue, not what your business could be making, not what you feel like you make. It's what can be backed up in a way lenders accept. If you need help with this step, I would suggest you watch this video right here, where I break down exactly how lenders calculate your self-employed income here in Alberta. The second story is your down payment. Where did it come from? How long has it been there? And can we trace it? To be safe, you should aim to have your down payment sitting in a separate account for at least 90 days untouched. This is called the seasoning phase. If you know, you know. The final story that builds your proof is your credit story. Your credit score is not about being rich, it's about being predictable. So for the next 12 to 18 months, be as predictable and boring as possible. This is not the time to be spontaneous. No missed payments, no new debt, and try to keep your utilization below 30%. If you have any collections, you can also use this time to pay those down as much as possible. During this stage, you should also be thinking about which lane you're in. In lane A, your taxes show enough qualifying income and they're relatively clean and straightforward. This is usually the easier and preferred path for the big banks. But in lane B, you might make great money, but you write off a lot and your taxable income looks low on paper. This is where people get told come back after 2 years, or you don't make enough money even when they're doing over $300,000 in revenue a year. In stage 2, I'm going to show you how to identify which lane you're in without guessing, because most self-employed people are secretly living in lane B without even realizing it. But right now, stage 1 is about giving yourself leverage. So here are some simple but high impact actionable steps you can take during this stage. This video is sponsored by myself. If you're looking to buy a home in the next 6 months, or just want some clarity on your current position and where you stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. It's completely customized, and once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. This is not automated, it's me doing the work. Also, make sure to follow me on Instagram at @itsushindi for more self-employed mortgage advice, or if you have any questions and just want to chat, a link for that will be in the description as well. Let's get back to the video. Number 1, please separate your personal and business banking. Think of it like trying to prove your calories to your trainer. If you're eating from 5 different plates, must be good by the way, but if you're eating from 5 different plates and use 5 different tracking apps, you're just confusing the whole situation and creating a hurdle that can easily be avoided. The second actionable step, stop random credit damage. If your utilization is high, your approval shrinks even if you're paying the minimum down every single month. And number 3, build your down payment proof folder. Every single time money moves, whether it's a gift from a family member, from your savings, a business transfer, save a clean PDF trail. Because later on, lenders will ask, where did this money come from? And you do not want to be digging through your phone for screenshots at midnight on a Friday night. Stage 2 is where we stop using your revenue and start using the numbers that lenders actually use to qualify you. And once you see it, you'll understand why so many self-employed buyers get blindsided. This stage begins 6 to 12 months before you buy. This is the stage where you and I sit down and we decide, how are we going to present your income and your story to a lender? Because self-employed income is not just one number. It's a story that gets calculated in different ways depending on if you're incorporated, a sole proprietor, how consistent the income is, how long you've been operating. And although people love to bicep this last one, what is your write-off strategy? Lenders won't deny you because you're self-employed. They'll deny you because your file is unclear and the income strategy they've chosen does not match the income strategy and your tax strategy that your business is living in reality. What lenders want to see is proof you're operating legitimately, a history that shows stability, and documentation that once again supports the income strategy that they're using. The goal for this stage is to, number one, identify your lane and pick your strategy. If you're in lane A, we make sure your qualifying income is being captured properly, and we'll build you an A lender path that's clean and smooth. If you're in lane B, we do not panic. We sit together, we acknowledge that you're in lane B, and choose a strategy and plan that matches your specific situation. We need to make sure we're on the same page and this step is done correctly, because coming up, I'm going to show you how to do a self-employed pre-approval the right way, and this stage begins 90 to 120 days before you buy. Most people think a pre-approval means they're guaranteed, but in real life, a pre-approval is more like, based on what we've seen so far, this is the direction. A lot of people get pre-approved from a quick conversation where someone asks, how much do you make? How much down payment do you have? What's your credit like? And then they just throw out a number out of nowhere. But in your case, for self-employed income, you don't want to take any guesses, okay? You want validation. A real self-employed pre-approval should do 4 things. First, confirm your lane. No guessing, no hope, just clarity. The second, confirm your ratios. Your mortgage approval isn't just income. It's income compared to your debts and the housing cost. Third, confirm the down payment acceptability. Your down payment is not just do you have it, but can we prove it's yours? Which is why the first stage I mentioned in this video is so important. Fourth, identify deal killers early. Things like tax balance owings, missed filings, messy deposits, high utilization, or even cash flow that just looks very volatile on the paperwork. This is the stage where we hone in on your timeline and begin to set realistic expectations. If you follow the first 2 stages, then this stage, stage number 3, should have no surprises. The next stage, stage 4, is where you start to enjoy the fruits of your labor and begin house hunting and writing an offer. The moment you start house hunting, the clock starts ticking. And here's what most self-employed buyers don't realize. Your realtor is working very hard behind the scenes, negotiating the price and possession. But that being said, you also need someone behind the scenes to, 1, make sure the property you choose qualifies, and 2, negotiate your approvability. That's approvability. That's a word, right? Yeah, approvability. So here's what matters in this stage. First, financing condition length. The financing condition length is the timeline the lender has to fully approve the deal. If you make that window too short, you can create time pressure that's extra dangerous, especially for self-employed files. Completing all the prior stages discussed in this video will help shorten the timeline the lender needs. That being said, if you've been skimming through this video and not taking notes, just staring at my face, I would strongly suggest you bookmark this video, write down the title, and come back to it and take clear, actionable notes and steps when you're 12 to 18 months away from buying. The second important factor in stage number 4 is your property type. It sucks, but some properties are just tougher to finance than others. Definitely not impossible, just different timelines and different conditions are needed. The third factor of the house hunting and making an offer stage, don't just buy the max because you were quoted a number. Self-employed approvals can change if your income is recalculated, documents get updated, debts shift. So we want to make sure you have some breathing room. Because once you get an accepted offer, stage number 5 begins. And this is the part nobody warns you about. This is where you go from conversation to underwriting reality. This is where approvals are actually made. Again, if you've been listening and taking notes up until now, you're in good hands and have nothing to worry about. But if you fell asleep for most of this video and have questions, make sure to send me a message on Instagram and I can definitely help you out. The link for that will be in the description. In stage 5, lenders are looking at your file and asking, can we defend this approval if someone audits it? That's the mindset. Underwriting typically focuses on confirming your income, debts, and down payment sources, the property value, and even confirming overall stability. This is where self-employed borrowers often feel like the lender is asking too much. I mean, personally, if I was borrowing someone $600K, which I would never, but if I was, trust me, I would be asking a lot more than just some files and some documents. To ensure this stage goes as seamless as possible, there are two very important things that you must do. The first is income clarity. If your business and personal money are mixed or your documents aren't aligned, underwriting slows down. The second, down payment paper trail. As mentioned earlier in this video, how you got the money is just as important, if not more important, than do you have the money. And if your down payment is moving from the business to the personal to crypto, then back to your account, it becomes a mess. Stage 6, conditions plus documentation. Up until now, it's been a long journey. But that being said, you did not come this far just to come this far. You're almost in your dream home, but a couple more things need to be done before you can celebrate. When underwriters review your file, they issue conditions. Conditions are not a rejection, regardless of what you might think. Conditions are the lender saying, prove these remaining pieces and we'll finalize the mortgage. That's it. That's all it is. This is where you and I work closely to make sure we're making the underwriter's job as easy as possible to give you the best possible chance of getting in your home. And here's how we win during the stage. Rule number 1, one folder and PDFs only. If we send 37 screenshots, random photos, and a half a statement, underwriters slow down and they will hate both me and you. We want to make sure their job is as easy and seamless as possible. Rule number 2, we explain large deposits before they ask. People don't hate bad news, they hate surprises. So if you have a big enough deposit that isn't clearly payroll, savings, or something normal for your business, we explain and document it upfront. The final rule, and maybe the most important one, we do not create any problems mid-application. I get it. You're excited. You want to buy furniture, finance a truck, use the card for renovations, but now your ratios change and the lender can recheck your credit, and when they do, there goes the house. So as mentioned, this stage is very boring, but it needs to be. If you want excitement, go skydiving or something. I don't know. My job is to make sure the process is as easy and stress-free as possible for you. And if you have to be bored for me to accomplish that, if I have to be the bad guy and annoy you every single day to make sure we have our documents and our folders all set, that's okay with me. But when you and your family are enjoying the first night in your home, it will all be worth it. If you're looking to buy a home in the next 12 months and want to make sure you go through all 6 stages as smoothly as possible, or just get a better understanding of where you currently stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining how a lender would view your file, and laying down a clear approval strategy based on your timeline and your goals. Also, make sure to follow me on Instagram at Ushindi for more self-employed mortgage advice. Or if you have any questions, a link for that will be in the description as well.